from 2013 till today, my conviction went from I'm pretty lowly, I'm going to buy a little of this in case it works, and I'm pretty lowly convicted that this can really turn into real money, to I'm completely convinced that this is another form of sound money. The odds of technical failure are extremely low, like less than half of 1%. And Bitcoin really does kind of represent digital gold. And in many ways, it's superior to gold because it's easier to store and transfer. I mean, the only negative is it has an ongoing energy cost to run the network, but I think it's small enough relative to the total value of the network that it won't be problematic. So, to me, it's a better form of gold. Right now, the issuance rate of the two is about the same. As you're probably aware, in April there'll be a halving, and so the issuance rate of the Bitcoin reward will fall in half. At that point in time, gold on a stock to flow ratio, Bitcoin will be sounder money than gold.
The U.S. Securities and Exchange Commission, SEC, seemingly met with BlackRock, the world's largest asset manager, to discuss the company's application for a spot Bitcoin exchange-traded fund, ETF, this week, according to Bloomberg research analyst James Seyffart, noting that Grayscale Investments has engaged with the SEC regarding its bid to convert the firm's Bitcoin Trust, GBTC, into a spot Bitcoin ETF. The analyst shared insights on social media platform X on Wednesday, along with posting several slides from BlackRock. He wrote, "Looks like BlackRock also met with SEC. There are a couple of slides about in-kind vs. cash creation. Based on this, it looks like BlackRock prefers in-kind for their Bitcoin ETF, which makes sense as it's probably the cleanest structure for them and end investors." Lawrence Lepard is the founder and managing partner of Equity Management Associates, an investment management firm focused on monetary debasement insurance through investments in gold and silver miners and Bitcoin. In this video, he discusses the superiority of Bitcoin over all other assets, including gold, including what he thought could go wrong with Bitcoin and why he thinks it's not possible. Let us now get into the video, and don't forget to like, subscribe, and drop your comments below.
People ask me what can go wrong with Bitcoin. I say that, well, there are two things. One, if it technically blew up, and you got to understand how it works and what it is, and the core developers and the nodes, and there's a lot to learn. But once you learn all of how it works and you realize that we've mined over 800,000 blocks and it hasn't blown up, you start to develop a level of confidence that this thing's probably not going to blow up. It looks pretty good. So that's part one. Part two is it's got to be adopted. Money is just, as Carl Menger said, money is just the most liquid good, right? And so it's what everyone agrees on is money. We only agree dollars are just a piece of paper with ink on them. We all agree that we know what they are, we know what they look like, we all agree they have value, and we exchange them. The same is true of Bitcoin, right? There are 21 million of them. You can verify them, you know what they are, you control them with a private key, etc. But if nobody gave a shit, it wouldn't be money. So the other metric I watch is adoption. Are more and more people using this shit? And is the value of it going up? And the fact of the matter is, albeit very volatilely, the value going up, but it's going up. And probably more importantly, and I think a better metric to just watch, number of addresses, number of users, number of transactions, number of use cases, number of applications. Those things are all growing very, very rapidly. And that, combined, with the technical risk being lower in my mind now than it was in 2013, and with the use cases growing very consistently and rapidly, I'm quite convinced, and with a limited supply, it'll be a while till we've mined all 21 million because asymptotically we're approaching that number. But with a limited supply, I'm quite convinced that this is going to be the superior form of pristine collateral. It's going to be the best savings money we've ever had, better than gold. Which is not to say that I think the value of gold is going down, because I think given the monetary debasement that's going on, gold's going to go up a lot. Bitcoin's going to go up even more. Is kind of the way I see the two. But it's kind of an enigma to me. It could be that he's just so wrapped up in gold and he's defending his book and he's defending his gold clients. It could be, he's a pretty arrogant guy in my opinion, and nothing wrong with that. But he's pretty self-confident and not necessarily into having an open mind. And I think, to accept Bitcoin as a form of money, you kind of have to be open-minded and curious. I'm not quite sure exactly where he's coming from to arrive at the conclusion he's arrived at. In so many ways, he does correctly understand the monetary debasement issue, and that leads him to gold. He's right about that. I think what he's missing is that maybe he hasn't taken the time to fully understand what Bitcoin is. The thing that is interesting, I mean, and you know, a lot of gold bugs get thrown off of Bitcoin because of all the noise around crypto. I mean, I'll say this, right? I mean, you know, the Sam Bankman-Frieds and all the crypto frauds and the Celsiuses and the, you know, all the other shit that's gone down in crypto has really hurt Bitcoin. I mean, there's a lot of fraudulent crypto crap out there. And that's not Bitcoin. Bitcoin's an entirely different thing. And my guess is that a guy like Schiff probably looked at all that and said, "Oh, I know what that is. That's just a bunch of promotional crap." And he's right. But what he didn't do is he didn't go to the next step, which is, but maybe I should study this Bitcoin thing more deeply, because to me, you know, what Bitcoin really is, I think a lot of people miss this. It's not just a money, it's not just a technology, it's not just a profit-making scheme. It's an actual invention, and the invention is legitimate digital scarcity. In other words, everything digital hasn't been scarce. You know, you can create a file, you can create a music file, you can create a Word file, any kind of, you know, anything that's digital, you can copy it a million times, right?
Yep.
But the Bitcoin network and the Bitcoin system solved that. They solved for that. They created these coins, which are controlled by a set of keys, which are limited and which cannot, they're immutable, they can't be changed, and that record is held by everybody, so everybody knows what everybody holds. You know, it's triple entry accounting. There's a third eye looking at it all. And that's an invention. That's actually a technical invention, digital scarcity. And so I think it needs to be compared to like the Wright brothers airplane. You know, I mean, before there was an airplane, human beings couldn't fly through the sky. Well, now they can. You know, and before there was a printing press, you know, monks had to copy manuscripts. You know, so you only had X copies of the Bible because there was no printing press. Well, now you can make lots of copies of the Bible.
The flagship crypto asset breached the $37.6 thousand price level despite the departure of another significant crypto figure and setting it up for $40,000. The leak of a possible massive settlement with Binance early this week initially rocked the crypto markets, but sentiments changed in the ever-evolving digital space. The markets were rocked on Tuesday by the confirmation of the $4.03 billion fine and the guilty plea of the company's founder and CEO, Changpeng Zhao, who also agreed to step down from the role. Lepard believes Bitcoin is the fastest horse in the race and why he believes Bitcoin will certainly outperform gold.
I think Bitcoin is the fastest horse in the monetary debasement race, and I'm stealing that from Paul Tudor Jones, who's a really fantastic investor, has been very successful. So I think Bitcoin will outperform gold. But if you're 80 years old and you're putting all your wealth into one area, which I would never advise anybody to do, you know, you're looking for a sound money to put your money into, I would recommend gold over Bitcoin because gold never goes down 80% on a drawdown, and Bitcoin's had 4 of them. So, you know, I mean, to me, Bitcoin is more your aggressive growth stock, and gold is more your bond, you know, that will, you know, give you income and grow, and I mean, income in terms of increased value and protect your purchasing power, but it's not going to, you know, go wild to the upside unless we have a monetary reset. But in turn, you know, it's been out there for so long, so many people hold it, it's so hard to produce, etc. That I mean, like the biggest annual drawdown we've ever seen in gold was 30%. That was like 1 year. I think, generally speaking, a big drawdown in gold is 15 or 20%. You know, but think about it. If you're older and you've got a lot of money, you know, you don't want to have an 80% drawdown. You know, if you've got $10 million and you buy Bitcoin, and Bitcoin goes down 80%, which it has in the past, right? You've lost, you know, 80% of your capital. Well, that's pretty devastating. So to me, you know, I'm a risk manager and I'm an investment manager. I've got a lot of older clients, and you know, what we do is we figure out what the right percentage of Bitcoin for them to have is, you know, so that if it goes down 80%, that doesn't change their lifestyle. And then, you know, we put the balance in gold and gold related things. So, it's kind of, you're kind of, you know, you say which is better. It's kind of like one's an apple and one's an orange. Do you know what I mean? And they each have different characteristics. Oh, Bitcoin's better money. Oh yeah. Bitcoin's definitely better money because, look, I mean, it's verifiable, it's easier to transfer, it's less cost, it's digital. We're going to a digital world. I mean, Bitcoin will ultimately replace gold. There's no doubt. Gold will just become you know, an industrial and jewelry metal. But you know, it's interesting. I mean, all Bitcoiners think that's going to happen tomorrow, and it's not. There's going to be in my opinion, it's not. It's going to take time. But again, Bitcoin will continue to outperform gold. So if you're a very aggressive investor and you can live with the potential drawdowns, I mean, if I were in my 30s, I advise all my kids, they've got some savings. I've said, put it all in Bitcoin. You know, you don't need any gold. There are all kinds of problems with gold. I mean, There've been fake gold. I mean, tungsten is a metal that's very close to the atomic weight of gold, and so, in China they found a ton of gold bars that were basically tungsten plated with gold. So yeah, and now there are ways to detect that. I mean, and in fact, there are gold dealers here where if you take them a kilo bar, they're going to saw it in half to protect against that risk. Now there are machines that will actually give you a surety that the thing is solid. But the point is that yeah, gold's got a lot of problems. On the other hand, if the computers aren't working and you're looking to just do a cash exchange on the street, um, a gold coin is a gold coin. Most people know what it is, and you can take a gold coin into any country in the world and go to a coin shop and exchange it for the local currency. I mean, I've always said, having gold is really good for bribing the border guards when you're trying to get out of Dodge. I mean, personally, I'm about half and half. I'm 66 years old, and that feels like kind of the right balance to me. I mean, look, and by the way, what'll happen there is if Bitcoin outperforms gold the way I think it will, eventually that half that's gold will become 5 or 10%. And I probably won't sell it, but I'll say this: as I earn money these days, I don't use any of it to buy gold. I'm done buying gold. If I earn money, I buy Bitcoin.
Right.
My clients, it varies. I mean, I have people who have 1%. I mean, the only thing I really say quite strongly, I pound the table on it. I say having zero is wrong. You've got to have some Bitcoin because we don't know what's going to happen to it, but it could go up 10x, 100x, 1000x, 10,000x over 20 years. I think it might. And therefore, if you have zero, you don't get to participate in any of that. And there isn't an investor in the world that can't live with a 1% loss. So, hey, Mr. Investor in EMA, you need to at least take 1% of your capital and put it into Bitcoin, at least. And I tend to try to push people to get to 10%. And some people get much higher, and they should. But, I mean, and like I say, it doesn't, if it's as asymmetric as I think it is, it's not like you need to take 100% of your money and put it in Bitcoin. You don't. I would never recommend that. But to have zero in Bitcoin, no, that's very bad too. So I think and I know a lot of 30-year-olds that are 100% Bitcoin. That's fine. They can do that if they want. They're taking risks, but that's okay. They're young. They can recover. They've got a very long time frame. They've got earnings power. As you get older and later in your life and you stop working less and your earnings power goes down, preserving your assets becomes a bigger focus than growing your assets. You might have enough assets and what you want to do is not lose. You're not concerned with winning big, right?
The crypto market is largely positive due to expectations that a deal with the largest crypto exchange in the world will increase the crypto industry's expectations for spot Bitcoin ETF, though it will now have to abide by the regulations of traditional financial institutions. This year, the value of Bitcoin has already more than doubled, while Ether has only slightly increased in value by 70%. Investors are hoping that things improve even more in 2023 and that everyone will live in a truly greener future, as the holiday season appears poised to bring even more gains for the industry. Consequently, Bitcoin halving is the main storyline for 2024 following a spot Bitcoin approval. The benefits received from mining Bitcoin are split in half during an event known as the halving. For each block of transactions they mine on the Bitcoin blockchain, miners currently receive 6 points to 25 Bitcoin. Nevertheless, these rewards will be reduced to 3.125 Bitcoin as of the subsequent halving. The halving has historically always been followed by an intriguing spike in the cryptocurrency market. The incentives for block mining were lowered to 6.25 Bitcoin during the most recent halving in 2020, and this marked the beginning of what turned out to be the biggest surge in the cryptocurrency market. Bears on Bitcoin have little reason to exert pressure on the market, while bad news has no effect because the final round of ETF decisions is slated for January and February. In the end, the route to $40,000 gets increasingly certain. Data monitored by blockchain analytics company Glassnode highlighted that the proportion of the circulating supply of Bitcoin that was last active on-chain at least a year ago has risen to a record high of 70.35%, surpassing the previous peak of 69.35% in July. In the wake of crypto-wide contagion and macro headwinds following its all-time highs in 2021, a strong belief from Bitcoin's holder base is reflected in the new lifetime high. Moreover, the proportion of supply that has not changed on-chain in the last 2, 3, or 5 years is at record highs. It demonstrates that even though Bitcoin has more than doubled to $37,000 this year, long-term investors are not in the mood to sell. Monthly futures contracts for Bitcoin typically have a different price than standard spot markets because participants want to pay more to postpone settlement. There is now an 8% premium in Bitcoin futures, indicating that leverage long demand is significant but not overly so. Considering the recent flow of regulatory news, this level is quite favorable even though it is lower than the 11.5% observed in mid-November. What do you think of Lawrence Lepard's bullish stance on Bitcoin? Let us know in the comment section below. Also, don't hesitate to like, subscribe, and turn on notifications. Thanks for watching.